Welcome to Talk Tickers, your shortcut for getting up to speed on crucial earnings calls.
Glad to be here.
Today, we're digging into Abbott's first quarter of 2025. And the big picture, well, they pretty much hit their targets.
Yeah, they delivered that high single-digit sales growth they were aiming for, and even better, double-digit earnings per share growth.
And that adjusted EPS number actually came in right at the top end of their own guidance, didn't it?
It did, so a strong start.
Okay, so our mission today is to unpack these numbers, look at how the different parts of the business performed, get management's take on the whole global picture, especially tariffs.
Which is definitely a hot topic right now.
For sure, and then see what they're projecting for the rest of the year. Let's jump in.
Sounds good. So first quarter sales overall up 7%. But, if you pull out the COVID-19 testing sales, which we knew were going to decline.
Right, that's expected.
Then growth was actually over 8%. So the underlying business looks solid.
And the bottom line, the earnings per share.
Adjusted EPS hit $1.19. That's an 11% jump year over year. It beat the consensus estimates and, like you said, landed at the very top of their guidance range.
Okay, and organic growth.
Also strong. 6.9% overall, or 8.3% once you strip out the COVID tests again.
So good momentum there.
Yeah.
But global company means foreign exchange always plays a part. How did that look?
It did have an impact. Compared to Q1 last year, foreign exchange, or FX, took about 2.8% off the top line sales. So unfavorable year over year.
But I heard there was a bit of a nuance with the dollar during the quarter itself.
Exactly. The U.S. dollar actually weakened a bit during Q1. So compared to the exchange rates they were assuming back in their January call,
Okay.
It actually turned out to be a bit favorable. So less of a headwind than they might have braced for just a few months ago, even if it was still negative compared to last year.
Interesting. Let's talk margins. Profitability looked decent.
Very decent. Adjusted gross margin was 57.1% of sales. That's up 140 basis points. Pretty significant jump.
Yeah, that's quite an improvement.
And adjusted operating margin followed suit, up 130 basis points to 21% of sales. So yeah, healthy expansion there. Shows good operational control.
Okay, looking forward then. What's the guidance for Q2?
They're forecasting adjusted EPS between $1.23 and $1.27 for the second quarter.
And the full year picture on currency, have they updated that?
They have. They now expect FX to be an unfavorable hit of around 1% to full year reported sales.
Okay, a 1% headwind for the year.
Yeah, and they expect about half of that, so a 0.5% negative impact, specifically in Q2.
But despite that, and despite the tariff talk we'll get to, they kept the full year earnings guidance the same.
That's right. Full year adjusted EPS guidance was maintained. It suggests, they feel they have levers to pull or underlying strength to offset those pressures.
Confidence in the outlook then. Okay, let's break down the business segments, starting with nutrition. Sales up 7% there. What was driving that?
It was pretty broad-based within nutrition. Adult nutrition saw high single-digit growth, and their big brand there was up 8.5%. Just really strong demand.
And pediatric. There was some disruption there in the past few years.
Yeah, but U.S. pediatric nutrition had double-digit growth this quarter. And critically, Similac is still the #1 formula choice.
Right.
So looking much healthier there.
Good to hear. Moving over to diagnostics, sales were down 5% there, but that was mostly the COVID testing drop-off.
Exactly. That was the main story. Decreasing COVID test sales pulled the whole segment down. But if you look at the core laboratory diagnostics,
the underlying non-COVID stuff.
Right, that actually grew slightly, single digits. Now, it was held back a bit by volume-based procurement in China.
VBP, that's always a factor there.
Always. But if you exclude China, that core lab business grew a solid 6.5%.
Okay, that paints a clearer picture. Any product news in diagnostics?
Yeah, they highlighted progress on a new system called Alinity N. It's for molecular nucleic acid testing, aimed at the blood screening market.
Blood screening, like for blood donations?
Precisely. Detecting contaminants. It's about $1 billion market, and they expect to launch this system by the end of the year. So a potential new growth area.
Interesting. Okay, let's shift to established pharmaceuticals, or EPD. Sales grew 8% there. Was that concentrated somewhere?
Actually, no, it was really broad. They said over half of their top 15 key EPD markets saw double-digit growth. So widespread strength.
And are they doing anything new in EPD? It's mostly older drugs, right?
Primarily, but they are strategically moving into biosimilars. They've signed deals to add 15 biosimilar products to their pipeline.
15.
Yeah.
Yeah.
And they expect these to start contributing to sales over the next 3 years. So it's a way to kind of refresh that portfolio.
Makes sense. All right, the big one, medical devices. Up a very strong 12.5%. Let's unpack this. Where did the strength come from first? Diabetes care.
Absolutely. Diabetes care was a huge contributor. Sales hit $1.7 billion, largely driven by Freestyle Libre, their continuous glucose monitor.
Libre's been a massive success story for them.
Totally. Growth was over 20% globally, and even faster in the U.S., up 30%. Just phenomenal adoption continues.
Incredible numbers. What about electrophysiology, EP?
EP grew 10%. Solid double-digit growth in the U.S., high single digits internationally.
Yeah.
The big news here was their Volt Pulsed Field Ablation, or PFA, system.
Right, the new ablation technology.
Yeah, it got its CE mark in Europe ahead of schedule.
Oh, really?
Yeah, so the European launch is actually kicking off now. They're planning the U.S. submission this year and hoping for approval around the start of next year.
So PFA coming online soon. Any other EP updates?
They also finished enrollment for their Focal Flex trial, which is interesting because it combines radiofrequency and PFA. That's also for a CE mark.
Okay, lots happening in EP now. Structural heart, another strong area, up 15%.
Yeah, really robust growth, driven by several things: surgical valves, interventions, and their transcatheter repair and replacement devices.
Like TVR and TriClip.
Exactly. They're gaining share in TVR, and TriClip adoption for tricuspid valve repair is really picking up. They just released new 2-year data from a major trial, TriLuminate.
And what did that show?
Showed significant reductions in heart failure hospitalizations and better quality of life with TriClip. Plus, they're launching a next-gen TriClip.
And isn't there reimbursement news for TriClip?
Yes, big news. CMS, Medicare and Medicaid Services, issued a national coverage decision that's expected mid-year and should really open up access.
Okay, so TriClip looks set for more growth. What about their TVR valve, Navi-tore?
Performing well in Europe, and they're expanding the U.S. launch now. So, multiple drivers in structural heart.
Definitely a key growth engine. How did rhythm management and heart failure do?
Rhythm management grew 6%. The main drivers were continued adoption of AVEIR, their leadless pacemaker.
Leadless pacing is a big focus area.
Huge. And also, their Assert implantable cardiac monitor. They mentioned a roughly 50% increase in the number of centers and trained docs for AVEIR.
So adoption is accelerating.
Seems like it. Monthly implants are up 30% among the early users. And they're already working on a next-gen AVEIR with longer battery life.
And other pipeline products in rhythm.
Yeah, they're developing a leadless conduction system pacing product that's got FDA breakthrough status, and they're aiming for a pivotal trial in 2026.
Lots of innovation there. And heart failure.
Grew 12%, mainly from their heart assist devices. And like TriClip, their CardioMEMS monitor also got a positive national coverage decision from CMS, which should help access.
Okay. Finally, within devices, vascular and neuromodulation.
Vascular was up 6%. Growth came from imaging, vessel closure products, and their S-Gree resorbable stent for below-the-knee use.
Anything new in the vascular pipeline?
Yes, they've started a U.S. pivotal trial for a coronary intravascular lithotripsy system, IVL. That's for breaking up severe calcium before stenting.
Ah, like shock waves inside the artery.
Kind of, yeah. They expect to finish enrollment next year and file with the FDA soon after. Also developing a peripheral IVL.
And neuromodulation.
The update there was starting enrollment in their Transcend trial, using deep brain stimulation for treatment-resistant depression. So, exploring new indications.
Okay, that covers the segments. Let's talk tariffs. It's on everyone's mind. What's Abbott saying?
They put a number on it for 2025, estimating an impact of a few $100 million.
A few $100 million. Okay. And when does that hit start?
They don't expect much, if any, impact in Q2. They see it starting mainly in Q3, affecting primarily the U.S. and China.
So a second half story mostly. How are they planning to deal with it?
Well, long term, it's about optimizing their massive global manufacturing footprint, those 90 sites you mentioned earlier.
Right. Making things closer to customers, building redundancy.
Exactly. Shorter term, they'll manage things like FX, interest rates, tax rates to try and offset some of the cost.
But they cautioned against just taking the second half impact and doubling it for next year.
Right. Yeah, they explicitly said don't just annualize it. Suggest they think their mitigation efforts will hopefully lessen the blow over time.
Got it. So wrapping up the outlook, full year commitments are still on track.
Yes, they reiterated that, they feel confident, and they highlighted a pretty big pipeline, over 25 key new products launching in the next 3 years.
25 products. That's significant fuel for future growth.
Definitely. And they expect the second half of this year to be stronger than the first half.
Why is that?
Partly the new product momentum we just talked about, but also easier comparisons, especially in diagnostics versus last year's COVID numbers, and also in international nutrition.
And margin expansion remains a focus.
Absolutely. Continued focus on improving gross margins.
One last thing on strategy. Any talk about M&A, mergers and acquisitions?
They said they're still looking, particularly in medical devices and diagnostics, but the key message was discipline.
Strategic and disciplined, focusing on returns.
Right. Return on invested capital, ROIC, and profitability are the main criteria. They said the current macro environment hasn't changed their M&A strategy or how they allocate capital. They feel their diversified model gives them an edge.
Okay. So, pulling it all together for listeners, what are the main takeaways from this quarter for Abbott?
Well, first, the strong start, especially in med devices and nutrition, really shows the strength of their diversified business, even in a tricky environment.
Resilience is key.
Definitely. Then you'll want to watch how they handle that volume-based procurement pressure in China diagnostics. Outside of just offsetting volume, how do they navigate that? The early CE mark for Volt PFA in Europe is a clear positive for EP, and the timeline for U.S. approval is now a key milestone to watch.
Right. PFA is a big battleground.
It is. Structural heart is clearly firing on all cylinders. TriClip, Navi-tore, the positive data, the reimbursement wins. It's a major growth driver.
You can really see the momentum there.
Yeah. And in rhythm management, the AVER leadless pacemaker adoption is important. Is it really starting that shift towards leadless becoming standard? Keep an eye on that.
Good point.
Obviously, the tariff impact kicking in later this year and how well their mitigation works will be crucial for investors to track.
Sure.
And finally, that pipeline of over 25 new products provides a runway for continued growth across the board, assuming successful launches.
Okay, that's a great summary. Now let's transition to our favorite segment, where we toss around some, let's call them outrageous but plausible ideas. And we have to stress, this is not financial advice, purely thought experiments based on the call.
Absolutely not financial advice. Okay, my turn first.
Go for it.
All right, idea number one, short-term focus. Abbott mentioned tariffs hitting mostly U.S.-China trade in Q3, and they specifically called out managing FX as a short-term mitigation lever.
Okay. Where are you going with this?
Well, it's super speculative, but maybe you could consider a short-term long position on the Chinese yuan or shorting the U.S. dollar versus the yuan pair.
Whoa! Why?
The idea, and it's flimsy, is that as tariffs become real and both sides potentially react, maybe there are currency moves Abbott or others try to anticipate or influence or just react to. If FX is a key short-term lever, maybe there's a play there as the situation unfolds in Q3. Highly risky, very geopolitical.
Okay, definitely outrageous, maybe plausible depending on your risk tolerance. Very short-term and speculative indeed. My turn. Long-term idea.
Let's hear it.
We talked a lot about AVER, the leadless pacemaker, and Abbott's investment in next-gen leadless tech, like that conduction system pacing product. They clearly see this as the future, maybe the new standard of care.
Seems that way.
So the outrageous but plausible long-term idea is look for investments in companies focused on complementary technologies, specifically things like advanced remote monitoring platforms or data analytics designed for leadless cardiac devices.
The ecosystem around the device.
Exactly. As leadless pacing takes off, managing these patients remotely, integrating the data seamlessly, that becomes critical. A company that nails the platform or the secure data piece for this new wave of devices could become really valuable, maybe even an acquisition target down the line.
Interesting angle. Betting on the ecosystem evolving alongside the core device technology. Definitely a longer-term play.
For sure. Okay, that wraps up our deep dive into Abbott's Q1 2025 earnings call. We've hit the financials, the segments, the strategies, the outlook.
Covered a lot of ground.
Hopefully this breakdown gave you some valuable insights.
Yeah.
But please remember, do your own homework before making any investment decisions. This is just our take on the call.
Always do your own research.
So what are your thoughts? How significant is that Volt PFA approval? What about the long-term potential of leadless pacing? We'd love to hear your perspective.
Yeah, join the conversation.
Thanks for tuning in to Talk Tickers. We'll be back soon with another earnings deep dive. Until then, stay informed.